Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mary Phillips, Deputy Head of Portfolio Management at Dimensional Fund Advisors, to discuss market timing and why investors should stay invested. Mary, it's great to have you with us. Welcome to Trade Talks.
Yeah, thanks for having me, Jill.
And this is one of my favorite topics. Market timing is futile, even in a volatile environment. What is the effect of being out of the market even for a short amount of time?
It can be substantial for an investor. So just look back over the last 3 years. If you were sitting January 2020 and you knew the bad things that would happen, right? Invasion in Ukraine, global pandemic, do you think you'd invest? I think most of us would think, oh, that's a good time to be out. It'd be completely wrong. It'd be up almost 30% over the last 3 years. So it was a good time to be invested despite all of the hardships that we've seen in the world.
So why should investors not be deterred by a recession?
Yeah, a recession, I know it can be scary the way it hits home, but a recession is really telling you something that's already happened in the past usually. So if you look over 4 of the last 6 recessions, by the time they were called a recession, the S&P had already bottomed out and was well on its way to positive. So I think for investors, it's not a good metric to look at in deciding what you're going to do in your portfolio.
Tell us about a model that's designed to beat the market without trying, that Dimensional employs to its investment process.
Yeah, I think for us, having a framework, especially in these volatile markets, it's so important to have something to come back to. So first and foremost, diversification. So we get into the hundreds and thousands of stocks in each portfolio. That's going to help you not have your own investments go awry from one company's bad day. Very helpful. But second, use the strongest research in the world. We've worked with Nobel laureates since the start of our firm. They have a great way to think about where are higher returns, where to target higher returns, small cap stocks, value, profitability. And then I think most importantly, you've got to have a great implementation process that's daily and flexible so that you're staying focused on those areas of the market with a higher expected return while also managing risk.
So tell us about the value specifically. What are you seeing within that space?
Within value, great 2022. I know that was a big surprise to folks coming off of 2020, 2021. And it's been, I think, a testament to the research that came out 30 years ago. We're celebrating the 30th anniversary of a paper by Jean Fama, Nobel laureate, and Ken French that showed the value premium and really changed the way we all think about investing. All right, we talk about styles now because of that paper. And so at Dimensional, we focus on, if we're going to capture value, we want to do it so in a highly diversified manner. There's usually a handful of stocks that are going to drive the return, but if you try and figure out which ones you're going to get, they're going to get that, you might miss out. So it's better just be diversified and be focused every single day on that part of the market. Don't wait and rebalance every quarter, every year.
Right. So these are active?
Yes, very active. Yeah, exactly.
All right. Appreciate the insight, Mary. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.